The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. The show airs 5 days a week on TFNN from 3 to 4 Eastern, right in front of the Tom O'Brien Show, which goes from 4 to 6. 877-927-6648. That's the phone number to use if you want to give me a call. If you can't listen to the show live, don't worry about it. Head over to iTunes. You can pick it up as a podcast over there. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is open your smartphone browser, type in tfnn.mobi, and you can get the stream that way as well. Charts that I look at on the program are also viewable in Tiger TV. That also available on your smartphone. If you're sitting at your PC listening, you can tune in to Tiger TV by going to tfnn.com. The show is carried live on Channel 1. It is archived on Channel 13. All right, let's take a look at the major averages. It's what we always do to start off the program. First, talk about volume. NASDAQ volume has been getting heavier as the session progresses here. Yesterday on the NASDAQ, above average at 2.05 billion shares. We're tracking very close to that level. Right now could come in right around that 2 billion level. Volume yesterday on the New York Stock Exchange, also above average. 819 million shares yesterday. We're tracking about 5 to 10% higher than that today. What are the indices doing? S&P 500 down close to 5 points, 0.4% to 1350. We've got the Dow Jones Industrial Average. See what that is up to. Once again, trading near its session low here, down close to 71 points, 0.6% to 12,500. We have now, 7 straight days where the index has closed below its 200-day moving average, and the NASDAQ Composite. Let's check out the NASDAQ Composite. It is near its session low, down 18.5 points, 0.7% to 2828. Same situation for the NASDAQ. Looks like 7 straight closes below the 200-day moving average. I wanted to take a look at the New York Stock Exchange Composite Index because not that long ago it was one of the stock indices that was holding above its 200-day moving average, but yesterday it took it out with volume and it is following through to the downside again today. And let's see here, down 27 points, about 0.4% to 78.76. Let's look at the NYSE Composite. The yield on the 10-year note, not much movement in yields today. That is unchanged at 1.59%. The 30-year bond just down a little bit to 2.72%. Not much movement in the greenback either. U.S. dollar index at 81.07, up 1 tick. December gold lost $16.30 today, 0.9% to settle at $1,713.80 an ounce. This after the World Gold Council said, I almost said golf, World Golf Council, but no, it's the World Gold Council, said global demand for gold in tonnage terms fell 11% in the third quarter from a year ago. So waning demand for gold. Perhaps in recent days I've been talking about this GLD meeting with some resistance at its 50-day moving average. GLD hit an intraday low today of 165.18. It is trading up in the top half of its trading range now, down 94 cents to 166.20. But this 50-day moving average at, call it 169, could be a formidable resistance level for the GLD at this point. Crude oil today down 87 cents, 1% to 85.45 a barrel. Crude oil was higher yesterday on news that tensions between Israel and Israel and Hamas are escalating. Well, Israel continued to hit the Gaza Strip today with airstrikes and artillery shells for the second straight day, and Hamas in turn is ramping up rocket fire at Israel. There were reports of rocket attacks on Tel Aviv from the Gaza Strip today, so this is a very fluid situation, and it is not looking good over there, unfortunately. Yet another layer of uncertainty here for the market to try to cut through here. A lot of uncertainty out there. It's never good for the market. We're seeing that front and center, obviously, as major averages remain in the throes of a pretty nasty pullback. Other news in oil today, BP. Let's take a look at BP, because they paid a lot of money to Uncle Sam. BP said today that it will pay $4.5 billion in a settlement with the U.S. government over the 2010 oil spill in the Gulf. BP also pled guilty to felony counts related to the deaths of 11 workers, as well as lying to Congress. So BP hits an intraday high of 41.06. It is still slightly higher on the day, but only up 15 cents now to 40.31. Taking a look at some economic data today. Very busy earlier today with economic data flow. First of all, the American Association of Individual Investors came out with sentiment data today that showed bearish sentiment at its highest level since August 2011. But Charles Rotblut over at AAII said that bearish sentiment is not yet at extreme levels. Sometimes when you get bearish sentiment at extreme levels, that tends to be right around the time when the market bottoms. Okay, weekly jobless claims today. Big jump. I mean, they were expected to be higher than the prior week. The estimates were for claims to rise 33,000 to 388,000. They came in at 439,000, up 78,000 from the prior week. But this is 2 straight weeks now where claims have been distorted by Hurricane Sandy, so it's really tough to read too much into the jobless claims data today. But the increase in claims last week was the biggest since 2005 when Hurricane Katrina hit the Gulf Coast. So bigger than expected jump in weekly jobless claims earlier today, but a lot of that, again, distorted from Hurricane Sandy. We had tame inflation according to the Consumer Price Index. Overall, prices up 0.1%. That was in line. Core rate up 0.2%. That is consumer prices which exclude food and energy, which are probably the 2 most important. So the knock against the CPI and PPI data is why is the core rate excluded when food prices and energy prices are probably the most important things to consumers. But core rate came in at 0.2%, slightly above the consensus estimate of 0.1%. Empire manufacturing data for November came in at -5.2. That was a little better than the -6.2 in October, and it was also better than the consensus estimate of -8.5. So not too bad from the Empire Manufacturing Index. The Philly Fed came in, I think it was a little worse than expected, maybe in line, but it came in at -10.7 versus +5.7 in October. But inside the data, it came out that Hurricane Sandy definitely had an effect on the Philly Fed data as well. Taking a look at some earnings reports late yesterday. Check in on Limited Brands here. Limited is looks like it's in a little bit of trouble here. Bearish day for the stock yesterday. It hits a high over 48, closes near its session low. It is down another 2.5% today to 45.42. Limited owns the Victoria's Secret brand and also Bath and Body Works. But Limited Brands earnings there were up 4% to 26 cents a share, 2 cents above the consensus estimate. Sales were down 6% to $2.05 billion. That was in line. Same-store sales up 5%, and the board also authorized the repurchase of up to $250 million in stock. Sellers in LTD today. It is a stock that doesn't look good technically. Not too many stocks do at this point. But like I said, some of these names are going to find a bottom, They're going to start working on the right side of their bases, and these are really going to be your next market leaders. Others are just going to keep going down, and they're not going to be able to get out of their own way. These stocks will likely be laggards. So Limited takes out its 200-day moving average today. Let's move on, take a look at NetApp. NetApp was one of the big stars of the day. Normally a big move like this I would attribute to short covering, but Network Appliance really didn't have a big short position headed into earnings. The stock is up a little more than 11% today to $30.15. It has really been hit hard since September. It was a $36 stock that came down to about 28 bucks a share or something like that. But it is up 11% to $30.15. NetApp makes data storage products. Earnings fell 19% to 51 cents a share. That was 3 cents better than expected. Sales also fell down 2% to $1.54 billion. That was just slightly better than expectations of $1.5 billion. NetApp also expanded a share repurchase program by $1.5 billion. So investors like what they heard from NetApp. And then another star of the day here, let's take a look at PetSmart, PETM. This is a company that has really done a good job in recent quarters with execution. People certainly like to spend on their pets these days, and PetSmart is proof positive of that. You can see the stock is trading well off its session high of $69.59. The stock was last trading around $67.14, up 3.5% on the day, but it looked like it was ready to take out its 50-day moving average to the upside, but it is back below that 50-day line. So kind of a disappointing day for PetSmart, but again, with indices near session lows, going to kind of be hard for PetSmart to maintain the strength that it had earlier in the day. Big profit report from the pet retailer. Earnings were up 50% to 75 cents a share. That was 12 cents better than the consensus estimate. Sales were up 9% to $1.63 billion, also better than expected. Company raised its full-year earnings guidance. Same-store sales up 6.5%. Hard to find anything wrong with PetSmart's earnings report late Wednesday. Now, Williams-Sonoma, a stock that had been showing initial supporting action at its 50-day moving average. It was closed lower yesterday, pretty much right at the 50-day line. It is under pressure today, down 3.5% to 43.53. Williams-Sonoma, you see their locations in a lot of malls. They're an upscale home products retailer. Where else can you buy can openers for, $35? That's what you'll get at Williams-Sonoma. But company's done a pretty good job of executing. Under some pressure today, earnings up 20% to 49 cents a share, 4 cents above views. Sales up 9% to $944.5 million. That was also nicely above the consensus estimate. The problem was weak fourth quarter earnings guidance, so Williams-Sonoma paying the price as a result. Plenty more to get to, folks, and we'll do that in about 3 to 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. I write the Ultimate Growth Stocks newsletter at TFNN. If you want to check out 30 days free of my newsletter, just look in the breaking news area. On the homepage, it says Try Out Ultimate Growth Stocks. You can test drive my newsletter. 30 days free. It is an exciting time right now. First of all, I have no exposure to this market, so I'm sleeping a lot better at night, not worrying about, what stocks are going down and just volatile market conditions out there, tough to have any sort of edge. So I am sitting in cash right now, building a watch list, waiting for emerging leadership to take shape. It is not happening yet. The recent price and volume trends in the major averages tell me that it's probably going to take a little while longer. Hearing a lot of people saying that the market is so oversold that we're, due for some sort of near-term bounce. That may be the case, but right now, really all I want to see is the first day of a rally attempt for the major averages, the Dow, S&P 500, the NASDAQ, and then 4 days or 3 or 4 days after that first rally attempt, a big percentage gain and higher volume, good convincing up day for the market with good Russian trading volume. That would be a buy signal to maybe start nibbling at some names, maybe be a signal that the market's ready to start rallying here. My guess right now is it's probably going to be a tradable rally as opposed to the start of a lengthy new bull market. Remember, we are in at the tail end of a 3.5+ year bull market. That's probably going to need some time to work its way through and digest gains. And doesn't mean we can't rally between now and the end of the year. I'm prepared for that. And the thing is, are there going to be setups? If we do get a buy signal in the market, are there going to be setups to buy? What I know right now is that there are a lot of many more short setups than there are long setups in the market right now. So that's just a good example of how you let the market tell you kind of what it's doing. Listen to the market's messages. A lot of good short setups out there. I've heard the argument that, if you're not short this market, it's too late at this point, and I don't know if I agree with that, because the process of a big market leader breaking down takes a period of time. It's not about just shorting right at the top. Sometimes stocks top, and then they try to rally back, and then they fail, and then they try to rally back, and then they fail again, and then they try to rally back, and then they fail again, and the process of a breakdown takes time to play out. So the short answer is I don't think it's too late to be short some individual names out there, and I'm going to be writing about that over the next couple of days. Seeing some big bull market leaders, stocks that are up several 100% that have come off their highs but are still showing questionable technical action, where I still think it's not too late to short. Apple is a stock that no way would I think about shorting here. It broke below its 200-day moving average a couple of weeks ago. It is under a lot of pressure today, trading near its session low as major averages once again weakened late into the day. Apple now down $12.91 to $523.97. I heard David White earlier on his show talking about that 522 low for Apple set back on May 18th. You'd like to see a test of that low in light volume. 26 million shares back on May 18th, but looks like you're seeing a little bit of juice. It's at 23 million shares right now, so it's not exactly a test in light volume. So that means that this downdraft may not be over yet in Apple. But this is a stock that clearly is in trouble. And when you have a 25% pullback off the high like you have with Apple here, from a high of 705 down to 524 or 524 where it is now, it's a little more than profit taking at this point. I think this is more fears of slowing growth ahead, increased competition, ability to innovate, ability to come out with new products that are going to continue to resonate with consumers. I know Apple has its fans, and it's a hard company to bet against, but when you see the persistent selling pressure going on for this amount of time, I think it's more than profit taking at this point, and it is unlikely that Apple is going to be a market leader going forward. I know that's probably a controversial statement and something that a lot of people won't agree with, but I don't know. I just don't. I don't see it happening. I think it's only going to get more challenging for Apple, and we'll see. We'll see how it plays out here. All right, take a look at some other earnings reports today. Let's take a look at Walmart, WMT, as we head into break number 2. See Walmart under a lot of pressure, kind of testing its 200-day moving average down around the 67 level. Stock was down 3.8% to 68.61. We'll take a look at its earnings report when we come back. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in, as always. Go ahead and just get a quick check on the markets here. We got about 25 minutes left to go in Thursday's session. Right now, the Dow down 65 points, 0.5% to 12,505. Nasdaq Composite down close to 17 points, 0.6% to 2830, and the S&P 500 down 6 points, 0.4% to 1349. So shares of Walmart under quite a bit of pressure today. It gave up its 50-day moving average several days ago. Looks like a trip to the 200-day line at 67.12 could be in the cards. The stock last trading at, let's see here, 68.46, down 4% on the day. The numbers: EPS up 11% to $1.08 a share. That was a penny above estimates. Sales up 3%, a deceleration from the prior quarter. Came in at $113.93 billion. $113.93 billion. That was about $1 billion short of estimates. So that's a problem there. Walmart's U.S. business accounts for about 60% of the company's total business. Sales here rose 3.6% to $66.1 billion. Revenue at Sam's Club rose 5% to $13.9 billion. Its international division makes up about 25% of total revenue. International sales up 4.7%. So big revenue miss at Walmart. At last check, Target was doing well, but since the market is near its lows here, let's see if it's dragging Target down with it. Target's still hanging in there. This is yet another example where that 50-day moving average could end up being a resistance level. You can see back in late October, early November, Target had a problem getting back above that 50-day moving average. It's still below the line, up 1.4% today to 62.21. But this is another example where that 50-day line could be resistance in the near term. Earnings were down 1% to 81 cents a share, 2 cents above views. Sales up 3% to $16.93 billion. In line, same-store sales up 2.9% in the quarter. Here's a look at a lesser-known retailer, but still one that has a pretty good track record of execution. Technically not all that healthy these days, but Sally Beauty, down 66 cents, 2.7% today to 24.09. Hit an intraday high of 25.78. Now trading near its low for the day in very, very heavy volume. Earnings here up 34% to 39 cents a share, 3 cents above the consensus estimate. Sales came in slightly below estimates at $882.6 million. That was up 5% from a year ago. So rough day of trading for Sally Beauty. Remember TJX, was it yesterday or the day before? The stock rose on nice earnings. Another discount retailer came out with earnings today, Ross Stores, and we'll see Ross Stores, kind of a rough day for the stock, but it has recovered off its lows, down 1.7% now to 54.20 after hitting an intraday low of 52.25. They matched earnings of 72 cents a share. That was up 14%. Sales were in line at $2.26 billion. So just an okay average report for Ross Stores. And then these dollar stores, these dollar discount retailers, they've been in trouble for far back as the eye can see in steep downtrends here, but Dollar Tree finally in rally mode, up 4.4% today to $39.43. Earnings were up 19%, 2 cents above views to 51 cents. Sales mostly in line, up 8% from a year ago to $1.72 billion. And then a rocky day for a former leader here, TransDigm Group, another late stage base. We're talking about, is it too late to be short this market? On the one hand, we're oversold. We could see a bounce. I'd be suspicious of the bounce. It's probably going to be a bounce that you're going to be able to sell into. But, I don't think it's too late. When it comes to individual names out there, there are a lot of late-stage bases out there that, to me, still look like they're in the early stages of breaking down. And TransDigm could be one of these. It is down 4.5% today to 125.50. Took out its 50-day moving average yesterday, but lowered full-year earnings guidance was the problem here. This is a company that makes aircraft parts. The growth was pretty good. Earnings up 19% to $1.72, but that was 4 cents below the consensus estimate. Year-over-year sales growth of 35%, impressive, but they posted sales of $462.6 million, which was also slightly below estimates. And like I said, lowered full-year earnings guidance as well has brought sellers into TransDigm Group in spades today. So let me see if I have a weekly chart for TransDigm. It might be a saved one in here. No, here's a weekly. But you can see a stock that has made an incredible price move for a long time, and these are you're going to be your best short opportunities. TransDigm is still holding above its 40-week moving average. So what I'd wait for here is a break below the 40-week moving average, and then once it's below that longer-term support level, what does it do when it tries to rally back? Does it keep meeting up with resistance? If it does, that's going to tell you that buying demand continues to dry up. And the more a stock finds resistance at a former support level, that increases the probability that lower prices lie ahead. That's the bottom line. So still a little early with TransDigm Group as it holds above its 40-week moving average, but you can see these big red volume bars down here. Institutions look like they're definitely starting to unwind positions here. Want to take a look at John Deere. This is an agricultural equipment maker. This is a decent-looking chart. I mean, there are hardly any stock charts out there and growth names holding above their 50-day moving average, but Deere is doing just that. It is up 59 cents today, 0.7% to 85.33. Now, Deere reports earnings next week. I don't have the date handy, but I know it's next week. And again, they make agriculture equipment. They're expected to earn $1.88 a share, up 16% from a year ago, with sales up 12% to $8.8 billion. 877-927-6648. Let's talk to Roger, Mount Vernon, Washington. How you doing today, Roger?
Hey, good. How about you, Kenny?
I'm doing great. Thanks very much.
Hey, I've got a question on ISRG.
Yeah.
We've been talking about some of these, high flyer stocks that, have come down and that kind of thing. And was wondering about ISRG. Notice right now it's at 524.60, which is above its moving average by a hair, the 200-day. But it came down and tagged below that. I had an advanced order for a short at 520, and so it came down, activated it, and then the damn thing went back up. I'm wondering what you're thinking about that.
Yeah, I mean, this is another one of these big leaders that I think looks vulnerable here. The bottom line is, if you look back at the start of the bull market in March 2009, you can look at names like Intuitive Surgical and Apple and Priceline and Ulta Beauty. I mean, they're all over the place. These stocks that have made tremendous price gains. So, right now, Intuitive Surgical is still holding, its 50-day and its 200-day moving average are inverted at this point. So right now, it's basically trading right at its 200-day moving average, which is right around 524. Its 50-day is at 517, which could be support in the near term. It's not a bad short. I think it's early to be short this stock. I would rather wait for a convincing break below that 517 level and then see what happens when it tries to rally back. Because as I've been talking about, Roger, on my show in recent weeks, when a stock breaks through a support level, that support level can often turn into resistance. So at this point, if it breaks below 517, that's a feather in the bear cap, and then if it tries to rally back above 517 and fails, that would tell me that it probably had lower prices, lay ahead.
Yeah. Well, if it closes above the 200-day, then you think it's going to go higher?
It could, but here's the deal. I mean, so you're hearing a lot about this oversold market. When you look at the chart of the major averages, the NASDAQ, the S&P 500, and you look at the intensity of the selling over the past several weeks, listen, we are going to get day one of a rally attempt at some point, and then that rally's probably going to gain some traction, and when that happens, which I suspect is going to be pretty soon, you could see a name like ISRG rally right along with the NASDAQ. So, it's trading at right around 524 right now, sitting right at that 200-day moving average. So, you can't rule out the possibility of some sort of mild follow-through for this market between now and the end of the year. So, it's still a tricky market. The trend is downward, but if we get the first day of a rally attempt for the major averages, and then we get a 1.5% gain in higher volume, then all of a sudden these short positions are a little trickier. What I'm really thinking about, though, is just where we're at in terms of this bull market. More than 3 years into it, a lot of leaders looking vulnerable here. I think ISRG is eventually going to be a good short candidate. I'm just not quite ready yet.
Yeah. So you might think about covering that position and then looking, to perhaps get in later or go long on it if the market does rally some.
Well, I mean, if it firms up at this 524 level and starts to find support, you could get a run to 550. You can get around to 550 pretty easily, and this is probably going to happen if the market starts to rally a little bit. I think it's a viable short if it breaks below that 517 level, particularly in heavy volume, And just because it does that, though, I wouldn't go short. I'd wait for it to rally back and see if that 517 level turns into a ceiling. And if it does turn into a ceiling and it tries to get above it but keeps failing, then it's a short.
Then it's a short. Yeah. So I just got activated a little early then. Yeah.
Well, but I mean, so if you're short and you're only down, I mean, if you're down like a couple of percentage points, I don't think it's, I don't think you have to run for the exits immediately. You could give it a little bit room. It's just a matter of if the short is going the wrong way, you don't want to let a 2% go to 4%, go to 6%, go to 10%.
Right.
You know what I mean? Yeah.
Right. I do know what you mean. Yeah.
So if you're down a little bit on it, it doesn't mean you got to get out of Dodge at the drop of a hat, but I think that the better time to enter would have been on a convincing break below 517. But and that still could happen.
Yeah.
Yeah.
Okay. Well, I'll just watch it real close here and see what's up, and if it starts really booting me, I'll move on.
All right, Roger.
All right. Thanks.
Thank you. Appreciate it.
Bye.
All right, it's a good question about ISRG. The bottom line is it is still holding above support right now, so it's a bit early, but you get into a short position when it's still holding above support. Listen, it still could break support. We're in an unhealthy market, but we're also in a market that, even though I don't use oversold indicators, I know the oversold indicators out there are saying that that we could bounce at any time. And when you get a bounce from oversold conditions, it can make short positions, all of a sudden not work that well. So that's my thoughts on Intuitive Surgical. All right, where were we? Going through some earnings reports. John Deere. I wanted to just finish up my thoughts on John Deere. This is I really like the setup here, showing relative price strength and holding above support. Earnings next week, and we'll see what earnings look like. But there are no sellers in this stock at all, which is pretty compelling in the week tape that we're in. So we'll keep an eye out for John Deere and see if it can come up with a strong quarter next week. Another stock acting pretty well, kind of so-so fundamentals, not outstanding fundamentals, but really like the way Tupperware is trading after its gap up here about 2 weeks ago, kind of moving sideways after this gap up, showing relative price strength. I really like the way that it's holding on to gains, not seeing too many charts that look like this either. The only other one that I can think of that comes to mind would be ARM Holdings, which is a name that we've talked about. Again, I heard David White talking about ARM on his show earlier today, and I agree. This is a stock that should not be bought in this tape, but its price strength has to be respected up here. Bottom line, it is very extended now after a recent gap up over $29 a share. It's trading at $34.38, so would love to get a pullback here down to that 29 level, but it's acting so strong it may not happen. If that's the case, if it keeps moving sideways and forms a nice little base and we get some sort of follow through in the market, this 34 area may not be a bad entry point, but that situation still needs to play out, still needs to consolidate a little more, and most importantly, we need a better tape. All right, headed into the final break. Folks, thanks to Roger in Washington for his call on ISRG. We'll be back in about 3 to 4 minutes. Breakout Investing on TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Headed into the close. A little more than 5 minutes left to go in Thursday's session. Checking in on the NASDAQ Composite. Up off its lows a little bit. Almost 10 points. Down 10 points to 2837. S&P 500. Let's see if it's been able to rally a little bit off its lows. Yes, it has. A fairly tight trading range for the benchmark index today. It is now down 2 points to 1353, and the Dow Jones Industrial Average coming off its lows as well, now down about 33 points to 12,538. My Ultimate Growth Stocks model portfolio is completely in cash right now. There are some tempting shorts out there, but I am not ready to take that risk with the possibility of buyers coming into this market. Certainly there. You can go short and immediately get shaken out of that position. I just don't feel like I have an edge right now. That said, there are some interesting short setups. I just want to see these short setups prove themselves a little bit more. Now, when it comes time for going long or looking for long opportunities, they're just not out there. And that's pretty easy. So the only thing I really feel like doing right now is shorting, looking for some short opportunities, because long setups are so few and far between. You know, I look at a chart like ARM Holdings and a chart like Tupperware. I mean, there are isolated opportunities, but the fact remains that we're in a downtrend. And until we get some sort of buy signal from the market, that's going to come after we get the first day of a rally attempt. And, you know, just to reiterate, let's just say tomorrow on Friday, indexes close higher. They can close higher by 1 point, 2 points, 40 or 50 points. It doesn't matter. If we close higher tomorrow, that's day one of the rally attempt. On the fourth day or later of a rally attempt, which means that if tomorrow is day one, Monday would be day two, Tuesday, day three, Wednesday, day four. Now, I mean, Thanksgiving holiday next week is probably going to skew the volume, but assuming we didn't have a holiday next week, just say Wednesday we got a 2% gain in the major averages, and we got big volume, huge volume from the prior session. That would constitute a follow-through day. That's the buy signal I would be looking for. It's unlikely we'll see one next week again because of a shortened week of trading, but all you have to do is wait for day 4 or later. So the following week, we could get a buy signal, and we'll see what it amounts to. Sometimes buy signals can amount to tradable rallies, short-term rallies. Sometimes they can amount to something more. But I think what's important to keep in mind is that we are in the later stages of a bull market here, where a lot of these big leaders are in the process of consolidating gains. Hardly any have started to form the right side of their bases yet. So it's probably going to just take a little while for new leadership to come into focus, and I am perfectly happy to wait for that to happen rather than guess where the new leadership is going to come from. Some other stocks I wanted to take a look at really getting hit hard. Let's see what Mellanox is up to. Remember, this is an Israeli chip designer. Recently found support at its 200-day moving average. This is a stock that just still can't get out of its own way, down another 5.2% today to 79.18. So Mellanox remains under a lot of pressure. And remember, got 3D Systems. It wasn't just a few days ago the stock was showing strength, looking like it was ready to, bust out of a consolidation area. 3D Systems now working on 5 straight price declines, getting killed today, down $3.79, 9.1% to $37.78. So coming up tomorrow before the open, I'm going to watch for earnings from Cyberonics, CYBX, Foot Locker, FL, and Hibbett Sporting Goods, HIBB. Pretty quiet in terms of earnings tomorrow. Tom O'Brien Show coming up next. I'll see you back here tomorrow for another edition of Breakout Investing, 3 o'clock Eastern. See you then.